Hi, my name is Rupert Pontin and I'm Head of Insight and Communications at Brego. Welcome to the January 2026 Brego Auto Intel broadcast, in which we're going to look at what happened in the UK car market during the month of January 2026, as well as a short review of the economic and political position that influenced consumer behaviour in the first month of the new year. So without further ado, let's get going with the economy. And January was a much better month from an economic perspective, with some really positive indicators that have helped reinforce consumer confidence and give some support to retail activity actually across all markets in the UK. As predicted, though, the inflation rate did increase marginally, moving up to 3.4% from 3.2%. Although, as I said, generally speaking, this was expected. Now, predictions are that this will now decrease as 2026 unfolds, starting with a drop to 3% for the January figure, and that will be announced on February the 18th. As far as the bank base rate of interest is concerned, we did not enjoy a further drop, although it was a close call with the Monetary Policy Committee almost voting for another 0.25% off. And now that is now expected to happen next month. And of course, that will be a great help and great boost. On a more positive note, the Consumer Confidence Index has improved by 1 point to -16, and business confidence rate improved markedly from -31 to -19, which is really good news for all of us. In addition, the average cost of a litre of unleaded fuel dropped to £1.32 from £1.36 the previous month, further helping ease the cost of living. However, the average mortgage rate remained steady at 4.3% for a 2-year mortgage, which was expected to have come down a little bit. But for political reasons, there's a little unrest in this sector, stalling any good news. Whilst on the political topic, the Prime Minister has been under growing pressure of late, with questions being asked over both his authority and, more importantly, his decision-making ability. Now, this is primarily due to the Epstein furore and, of course, the subsequent Mandelson disaster, neither of which have helped the government as a whole. On top of this, we have the behaviour of the American administration, which has also remained cause for concern, putting a little bit of doubt in people's mind as to what's going to happen and what impact that might have on the UK economy. Now, this is what happened in the UK new car market, and we're using data courtesy of the SMMT. So January was a much better period when compared to the same month last year, which is great news. However, the market is in a different place in terms of pressure to get cars registered and onto the road, and discounting remains rife. Unfortunately, this habit looks set to be a necessity and an unnecessary, unwelcome evil during 2026. But overall, we can say new car registrations were up by 3.4% compared to January 2025. The full year figure for 25 showed the market has increased by 3.5% and exceeded 2 million vehicles for the first time since the pandemic. Once again, private registrations increased, but by a more mellow 4.6% compared to the 16% it did last month. And this represents a 36.4% market share. Now, that's up 0.4 percentage points on January 2025, so just a little increase there. Now, fleet was also up by 1.6%, though, and that means a 61.2% market share, which is 1.1 percentage points lower than last January. Unfortunately, EV registration stalled, with just a 0.1% increase, and market share for January was a lowly 20.6%. Now, that's 0.7 percentage points lower than in January 2025, and really it should have been much higher given where we were at the end of last year. Plug-in hybrids were up by 47.3% with a 12.9% market share, and that is up 3.9% on January 2025. Petrol registrations were down by 1.9% for the month, and the market share was 2.6 percentage points lower. Diesel were down 8.8% for the month, and that's a 5.5% share of the market, which is down 0.7 percentage point on January 2025. So migration away from the petrol and diesel registrations towards the hybrid and the plug-in hybrid. When we're looking at OEMs, the top three were Volkswagen with an 8.7% market share, Kia with a 6.9% share in second place, and in third place, BMW with 5.6%. From the top three sellers' perspective, we saw the Kia Sportage take the top spot away from the Ford Puma. JQ7 moved into second place, taking that away from Tesla Model Y last month, and Ford Puma came in third place, taking that away from the Volvo XC40. Now, this month, 3 Chinese models made it into the top 10. Now, that was the JQ7, the BYD CLU, and the MGHS. And that is in comparison to only 1 Chinese model in the top 10 last month, which was, again, the JQ7. From the Chinese brands on sale in the UK, they took just over 16% of all registrations, which is significant. MG were at 3.52%, JQ at 3.37% in second place, and BYD in third at 2.79%. However, the Chery Group took 6.1% of the market in total. Now, I'll just remind you that is more than BMW, who were in third place overall. Now, for the UK used car market, we're going to be using insight from Brego Whole Market data, and that's going to give us a really good view of what's going on in the used car market. So total adverts were up by 10.5% on the previous month, reflecting the new year return to business as dealers are beginning to advertise more stock post the festive season, where they had dialed things back a little bit. Now, pre-reg adverts were up by a significant 24.3%. Now, that is really reflecting the new year advertising position, but more importantly, cars registered for the end of year OEM and ZEV targets. Now, let's hope we don't see increases like that every month, because that is really quite significant. Now, trade adverts were up by 10.9%, making the most of the return to normal trading there. Dealers making sure they've got their stock advertised and giving themselves the best opportunity to do business. EV adverts were up by 24.8%, which is quite a chunk. And, perhaps coincidentally, it's a similar percentage increase as the pre-reg cars, but perhaps not to read too much into that. You're best using the Brego Insight tool to look at how the nuances work in the marketplace. Hybrid adverts were up 13.2%, and petrol adverts were up by 9.1%. And overall, sales were up a very significant 36.1%, which is great news, bearing in mind they were 11.8% down the previous month. Now, for context, the increase in January 2025 was 27.8%. So this really is a great start to 2026. From a days to sale perspective, they were up by 3.3 to 46.3. Now, that's kind of to be expected, because we still have some of those cars that started their advertising journey in December and carried over into January. So it's really symptomatic of the market conditions and the time of year, what with that slow festive period. From an EV days to sale, up by 4.5, so slightly higher, to 45.5. But they are still selling more quickly than the ICE cars. Must point out that we've removed some of the outliers in terms of some of the premium brands where those vehicles can take an awfully long time to sell. So we've removed those to give a balanced view. The average used car price went up by 1.4%. That's second month on the trot, it's gone up by 1.4%, and it's gone up to £16,940. However, the average EV price came down by 0.9%, and that's to 24,186. That's a little surprising, although this is probably due to the fact there are cheaper cars on sale, and that's probably something that's going to continue as we go through the course of the year. As a summary of the Brego Auto Intel data for January 2026, we have to say that January has given the bounce back the automotive sector was hoping for. A healthy and very welcome increase of 36.1% in used car sales, coupled with a 10.5% increase in adverts listed, is just wonderful. EV used sales and adverts also showed an impressive increase, albeit probably off the back of the discounting that took place in December to meet the OEM and ZEV targets. Consumer confidence continued to improve, but just by 1 point this month. But business confidence for the quarter improved by 12 points to -19, which is an impressive jump, probably reflecting relief that the budget did not have as bad an impact as was expected. There is no doubt that pre-reg activity seems to be back with a vengeance. This month's increase of 24.3% may be related to OEM ZEV targets, but given the high 33% of all sales to be EV as target this year, it's unlikely to disappear as we go through 2026. The wholesale market is kicked back into action, with both auctions and remarketing platforms reporting improved conversion rates and sales for most cars, although those in poor condition are still putting trade buyers off because they really don't need the recon costs. From a Chinese brand perspective, they accounted for 23,163 new cars in January, and that means it equated to a very significant 16% of the total market. That's in comparison to 12.8% in December 2025. Now, Chery Group as a whole took 6.1% of the new car market registrations, which would put them into third spot overall, above BMW if you were to calculate all of those together. There were 2,709 used Chinese cars advertised in January 26, and that represented 0.4%, yes, 0.4% of the total market. So that's 2 months on the top of that level. So there's no particular increases yet, which is a little bit of a surprise. So I hope you found this another valuable review of the auto market. But if you want or need more detail, be sure to read the Brego Monthly Car Insight Report, which can be found on our LinkedIn page and on our website. Or, of course, you can reach out to me or the sales team. We're now also posting insight and updates on our YouTube channel, which is called Brego Official. So finally, I just wanted to reiterate that if you want to improve your market insight and understanding of the nuances in today's UK auto sector, then you need to speak to the Brego sales team. Andy, Safi and Nick would be delighted to show you how the Brego pricing and market data will help you to improve your understanding of the market and ultimately increase profitability, because that's why we're here. Remember, they don't bite, they're here to help you. So just give them a call.